This is Eric Mother with Mother.com with a quick market update for October 21st, 2020, and this is going to be essentially a follow-up to the video I did this past weekend, and I'm just going to be taking a look at the weekly charts. We can see right now on the weekly chart, and the numbers are going to be in the description of the video. Right now the Nasdaq is back below the breakout level, so that should be a concern for bulls. We also have RSI 69.1 rejection on the Nasdaq. That's another concern for market bulls. This rejection is coming with uniform activity rejection. Not a good look. One can also say that as of right now, we've seen the market push to fresh all-time weekly closing highs, but this is coming with lower RSI levels, and that definitely is negative divergence. So right now, looks like the Nasdaq is giving a sell signal. There's something for the bulls to be concerned. Of course, this is still playing out. S&P 500, to keep it simple, we see that it is still responding to that line that we were looking at over the weekend, or I was looking at over the weekend, which is the RSI topside resistance line. We also have a failure of the weekly breakout on the S&P 500. And as long as this is the case, one can say that these are major red flags. Again, the breakout levels are going to be in the description of the video. We can also draw the uniformity line as such, connecting prior RSI lows. And this breakpoint, we know what happened here. This gap down led to this massive plunge. So the RSI on the weekly for the S&P 500 has come back to test that same level, and we can see that it has hit that level twice over the last couple of months, and so far that's a double top rejection. Again, that's another red flag. And of course, there's also again this failed price breakout. Now of course, this is playing out, so we never really want to rush into conclusions, but this is becoming of a concern for those who are bullish. Take a look at the Dow. As of right now, as the market's coming off the lows intraday, if you take a look at the Dow, we still see that net the RSI topside is being respected by the market. Remember, the market is the one doing this, it's not us. The market is choosing to do this, which means that this is meaningful to the market itself. The market is aware of this level. It is also a level of RSI 61.8 rejection. And then we also have this back test, this uniformity break line, which is becoming ever so relevant because that break led to this massive plunge. What the market is telling us is to watch for any future resistance around here. And you can see that the market is very aware of this level, very aware and sensitive to this level. By itself, this is a sell signal for the market. Now, it's not a cause for panic because the market always has the opportunity to break out above those two lines. But right now, we are seeing the resistance version of it. So we have to be sensitive to the possibility that the market is slowly changing its tone and could be favoring lower prices in the coming weeks, months, and in time. You can take a look at Dow Transports, and what I wanted to point out here is right now the Dow Transports are showing RSI 69.1 uniform activity rejection. That's a message there also of a market running out of momentum and setting the stage for a move lower. If we take a look at the Canadian market, as we pointed out this past weekend, take a look at this topside resistance line. Remember, again, the key here is the market is doing this on its own. It means it is aware of that level. Keep in mind there's a possibility of a trap, and this trap would be of a bearish version because a break below RSI 50 would be the first break since this break here. So watch that RSI 50 potential crossing on the weekly for the Canadian market. If it slashes below 50, expect the markets to have a big down week when that happens, if it happens. And then of course there's the uniformity resistance line just as we saw with the Dow, S&P 500. This is coming into play right now. Again, confirming that the market is very sensitive and aware of this level. As far as the Canadian market is concerned, we can actually say that it's hit this couple of times. This is the third time it's hit here and is being rejected. Again, we don't have to rush into conclusions, but this, if it continues being the case, if the market pulls even below current levels in terms of price range, this could be suggesting a confirmation that the market is running out of momentum. Now, because the S&P 500 and especially the Nasdaq, because these major averages have had a substantial move, it goes to reason that the next meaningful move lower, if the market cannot move above current levels, is for a substantial aggressive drop lower. This would be the other side of a successful bull market. Take a look at the Nasdaq. It has really had a substantial push since the highs of early 2000, which some of us thought the market might never move above, but the market cleared those levels in 2017, and we've had a substantial bull market since then. The other side of this is a market stalling at some point, maybe now, maybe in 2 weeks, 3 weeks, 2 months, 2 years, who knows, but at some point this market is concealing a major bear market down the road. It could be now, it could be later, but we need to watch those weekly charts for early signs of a pullback potential in the here and now, since we can only go by what we see at the moment. As a side note, as long as the Nasdaq is holding above RSI 69.1, there is no way this market is going to distract itself to the downside. So for the market to move lower, as far as the Nasdaq is concerned, the first order of business would be for the Nasdaq to move back below RSI 69.1 on its monthly chart. That's it for now. This is Eric Muathe with Muathe.com, and so it is. Love light, light love. Namaste.